We will kick it off, shall we, with Macquarie. MQG, you know it well. Earnings out today, full year net profit down 32% off the back of weaker performance across its commodities, global markets and asset management businesses. Weakness in Aussie M&A activity and lower asset realizations in green investments also impacted Macquarie's bottom line in fiscal 2024. So the commodities and global markets business recorded an annual profit of $3.2 billion. That's 47% lower than last year. Overall profit came in at $3.52 billion. Shareholders will be paid a final dividend of $3.85 per share, down from $4.50 per share last year. And Macquarie shares now on my screen are down by 2.5%. 183.74. I suppose with Macquarie, if you believe in the big bank and all of its, offshoots right around the globe, when does it become a buying opportunity for Macquarie?
Look, I do think today down a little bit. It is a good buying opportunity. Tomorrow it probably will be down, maybe a little bit more, maybe not. It really depends on the market condition. Share price has pulled back actually leading up to this result, somewhere between, I think it's 10-15% more recently. So, it's I think it represents a really good opportunity. The company, the result was a little bit weaker, and then the miss is really on that commodity sort of business. And we know, and company told the market that it is going to be weak because the energy prices hasn't been as volatile as it was before. So, and that's not a high multiple business anyway. And then, but if you look at everything else where they're recycling the capital, particularly in the renewable space, they're actually making, really good progress, and that will establish the foundation for the profit growth for the next following many years to come. They establish many funds with the, industry super fund and the like, so they can recycle a lot of those capital into it. So I think it's pretty good. A really good entry price. The result itself is nothing to really worry about anything else.
Okay, so that's a buy?
It's a buy, yeah.
Would you be buying Macquarie today on behalf of clients?
Yeah, anything with $180 in front of it's $183, so I'd be putting orders in around that $180 mark. That's sort of where my sweet spot is for buying Macquarie, because it's been fantastic, and I think Macquarie remains well positioned to deliver superior performance and growth going forward if this market does turn around. We've started to see the M&A activity here in Australia, but overseas we're seeing corporate actions as well. We're seeing a lot of activity. Macquarie will be very active in that space as well. So I think overall, the green investments was probably obviously one of the bigger things that dragged them down, and that's been pretty tough in a lot of the sectors in our market as well. So really comfortable with Macquarie. $180 would be my buy price for that one.
So is that saying just wait, you'll be able to get it cheaper?
Well, if Jumbo's right for Monday, it could be off a little bit further, and I think you'd be close to pick it up to 180.
Yeah, you're talking about probably mid-single-digit earnings downgrade for next year as well because of the flow-on effect, and that's it. So that's why I'm thinking it's down 2.5 tomorrow, probably, or Monday it will be 2.5%.
Okay, I'm going to leave that as a sort of an on the fence one then. Buy for you, hold for you. That means that it's encompassing that sort of potential to get it a little bit cheaper.